everybody. Inflation seems to be the word of the day. It's everywhere. If you've been in the housing market and you're in one of those hot housing markets, you've probably seen the price of housing through the roof. It's not just supply and demand. A lot of that has to do with cost. How does that affect my insurance, you say? Well, it absolutely affects your insurance because the cost to rebuild or replace or even rent during a time of loss can all be a major factor in a claim. So with inflation being as high as it is right now, it affects rents, rebuild costs, replacement costs, you name it. The question is, do you have enough coverage? And I'm going to bet right now that you don't. And the reason I say that is because I review policies regularly, daily, and most of them seem to be running below what is required for coverage. And one of the big issues is loss of use coverage. So if you have a loss that puts you out of your house, you have a specific amount of coverage. Generally, there are some unlimited policies. You have an amount of coverage to pay those increased costs to rent somewhere temporarily while your house is being rebuilt. Well, with rents as high as they are and the availability of housing as low as it is, people are finding themselves to have to pay considerably more for those temporary accommodations, and they're running out of coverage before the repairs are completed because repairs are delayed due to the supply chain and pricing and material availability. So all of this ties together into the amount of coverage you have. Now, what can you do about it? So I'm going to tell you right now that coverage is not keeping up, meaning you might have an inflation guard endorsement, which I'll talk about on the next slide. But overall, the industry is not set up and hasn't been set up to increase coverages for years. So if you're saying your house is insured for $350,000 to rebuild, it's conceivably $4.25 right now. It's conceivable that you have $50,000 or $100,000 worth of loss of use coverage, which is that coverage while you're out of the property, and you need double that. It's conceivable that you have 12 months coverage for that and you need 24 months. All of these things are going to add to how much insurance you need, and a conversation with your broker or your agent is really important. Certainly the time frames on delivery, and this is time now to reevaluate your coverage. So make sure you're properly covered. Look at the time frames. I recommend 2 years for the amount of coverage for additional living expense. And depending on the size of your house, you're probably underinsured by as much as 20%. So policies actually have some built-in guards. One of them is called the inflation guard endorsement, trade name. Yours could be a little different. And there's guaranteed replacement cost endorsements, which are like another 20% of the policy. But I can tell you right now, most of these are falling short on total losses. Meaning even with all of the bells and whistles on the policy meant to protect you, this environment is too crazy. So please contact your broker, contact your agent, say, listen, I want to really be protected in the event of a total loss. And with pricing and time frames the way they are, you should really have that addressed and make sure that you have enough coverage in the case of a traumatic event or serious event like that. Again, I'm Bill the Adjuster. I hope that's a helpful tip. If you want to get a hold of me, send me an email at smartclaim@metropa.com. I'd be glad to answer or do a tip for you. I get some unique ones in every day. So please let me know. But listen, if somebody shared this video with you, you can certainly ask them a question as well. Thanks, everybody, and have a great day.